Hi everybody, and welcome to the June 2025 Economic and Market Update, presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. Markets rallied in May as the economic news stayed positive and as trade war rhetoric calmed. The S&P, Dow, and Nasdaq were up low to mid-single digits for the month on solid fundamentals combined with reduced policy worries. The story was similar internationally as foreign stocks continued their solid growth. Both developed and emerging markets have outperformed the U.S. since the start of the year. Bond returns, on the other hand, were challenged. The 10-year Treasury yield rose from 4.25% to 4.41% in May on rising concerns about the federal deficit, weighing on bond prices. For stocks overall, the pullback in trade war rhetoric let investors refocus on the fundamentals. As we wrap up earnings season, it was clearly a strong start to the year. The average earnings growth for the S&P 500 during the first quarter was 13.5%, over twice initial estimates. Over the long run, fundamentals drive market performance, so this is a good sign. The economic updates were also broadly positive. The April job report showed continued solid hiring, which supported continued spending growth. Even inflation showed signs of improvement as consumer prices rose by less than expected in April. On a year-over-year basis, consumer inflation fell to a 4-year low, although this may well reverse in the months ahead. While there was a lot of good news, though, there are also risks to pay attention to. Domestically, the most pressing is policy uncertainty. The recent de-escalation of tariff rhetoric was good news as it brought the administration time to strike trade deals, but we still need to see real progress here, and markets may react badly if we don't. Beyond trade, we're also facing budget battles. Congress is in the process of trying to get a budget bill passed, which could lay the groundwork for sweeping changes to federal tax and spending policy. While it's too early to tell what will actually pass, this is something else that could well affect markets, and we need to keep an eye on the process. Outside the U.S., we also see potential disruption, such as the continued conflicts in Ukraine and the Middle East. All in all, investors have a lot to keep in mind in the weeks and months ahead. Overall, though, we're still in a good place as we head into the summer months. Market fundamentals were surprisingly solid to start the year, supported by the impressively resilient economic data that we've seen. With a solid economy, healthy job market, and more policy clarity from Washington, the most likely path forward is still for continued economic growth and market appreciation. That's it for this month's update. Please join me again next month for the latest news, and in the meantime, stay safe, stay sane, and stay healthy. Thanks for watching, and have a great summer.